The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we've got everything that you need to know before we head into earnings tonight. One more time into the breach, dear friends. Of course, we've got something that never happens in the stock market, and that is that it's gone down today. We know that the markets never go down. They only go up. We're off 12 points on the S&P cash. We're off 16 on the NASDAQ and off 224 on the Dow. And as we start off the day, a lot of this is just real nervousness. And that nervousness comes from Apple's earnings. This is a company, I guess we can talk about it more later, but this is a company that has had 3 mulligans in a row now. We have gone from Apple Pay that was supposed to change everything to the Apple Watch, which was supposed to change everything, to Apple Music, which was supposed to change everything, and all 3 of them pretty much stillborn. Nothing happening. Nothing happening on any of them. Apple TV actually is an okay project, but it's still not a big money maker. When you come down to it, Apple is one thing. It is an iPhone manufacturer today. And if any hint that that business is slowing down would really probably hit the stock price of Apple. Now, as we look at Apple, anytime it starts to get weak, they come out, no, we've got yet another model. The question is, at what point does the paradigm break that Apple users have to have the latest smartphone no matter what? We've seen that break happen in Samsung, and to an extent, all the people that wanted to buy high-end Android phones have. There's not that many new features if you buy a new Android phone. The one phone that they do have that is in wildly high demand is the Edge, the one that has the quarter-round right-side edge that you can use it as a separate screen, a little tiny thing on the corner, which is, what, a quarter inch by the length of the phone. It's more like a marquee in Times Square, something like that. Nothing like that from Apple yet, but certainly we are getting an updated version from Samsung of that Edge phone that's bigger. It's more like a Note. As far as everybody can tell, the updated version of the iPhone, the 6S, will come out sometime in September or October. But what we know about this one is it's mostly looks like a cost-reduced version of what they have to increase margins, which is not bad. But dropping the cost $20 or $30 is probably not going to be enough to really keep things going if anything slows down whatsoever. But, yeah, what else can you say? It is going to be very, very exciting to see what they say. Now, no matter what happens, if the news is not great, if the numbers aren't blowout for Apple, look for the usual suspects, the Apple shills from the street, to come out and tell everybody why the stock should only go higher. And my guess is that we won't really know what to think of Apple's earnings until tomorrow morning, maybe even tomorrow afternoon, where people have an actual opportunity to sell it. After the market, I know whatever bad news that comes out, if there is bad news, will be whitewashed away by the dulcet tones of the current CEO there. And maybe he's got something really good to report. I suspect not. I suspect that we're probably looking at inline earnings or maybe a little bit above earnings, which is not enough for a stock where everybody is 100% bullish on the stock. Very few people you can see even thinking about coming out that are looking on the downside. But of course, that's exactly when stocks turn. You've got to have somebody on the opposite side of this. We did see almost 133 as a print earlier today. 130.69 is the last print for Apple. But I've digressed long enough. History repeating. And as we continue, today in 1933, Wall Street begins to digest the implications of President Roosevelt, including the Glass-Steagall Act, enacted just a month earlier. The Dow Jones Industrial Average suffers its 9-month daily percentage loss, dropping 7.8%, or 7.55 points, to the close of the day at a dismal 88.71. And I think this is pretty close to the lows in the stock market of that time, but it really didn't move that much farther. In fact, it took 1946, I think, to really move anything significantly higher. And then when we came back, something else. Yeah. What else do we have? I have absolutely nothing on the opposite side. So hopefully, are we back? I don't know what's happening here. Everything's gone nuts. Okay, I'm still on. Okay, I just had something else that told me we were off the air and lost it. So maybe I'll get this all settled during the break out here. But it's very disconcerting to hear nothing on the other side, not even static. Anyway, so what can you say? I have to get into a round of I told you thusly.
I informed you thusly.
I guess that's I informed you thusly. What we have now is the Boston Fed president coming out talking a little bit about what I've talked about for a year and a half. And that is, here's his quote. So it would surprise me if I found out that people were using a particular model and didn't use any intuition about what goes into those models and what might happen if everybody blindly uses those models. He's talking about something that is called the iceberg risk theory in the stock market, and it is problematic. I said that the big problem, of course, is everybody's using value at risk. If anything actually ever hugely came out and started seeing a VIX above 19 for any specific time, you would have to see everything selling, and it would cause additional selling because, of course, everybody on Wall Street is leveraged to the hilt. Any kind of real selling would be a problem for the Fed presidents. And what Eric Rosengren, I guess so, is talking about here over the last couple of days was just that. Everybody's using the same model, which means that why it's supposed to get rid of risk, it's actually adding more on because any kind of selling would beget more selling. And you don't have enough begats other than the Bible. I think when's the last time you heard anybody say begats this or begats that? But anyway, there's plenty of capital there. We need to talk about how that needs to move from holder to holder, said Rich Prager, BlackRock's global head of trading and capital markets, as he told the Financial Forum in May. We clearly have a liquidity challenge at the moment, but we have to recognize the journey and talk about what needs to be done. I still think that what we have is one of the smartest men on Wall Street that's acting stupid, dumb like a fox, and that is the former head of PIMCO, who exited probably close to the highs, if not exactly at the highs. Probably couldn't get out of his contract, decided to act nuts for a while. That was enough to finally get kicked out of PIMCO and go somewhere else. But at least he doesn't have to be at the helm when the Titanic goes down with probably all hands on deck because, of course, the liquidity that all and everybody is talking about now is not so much the stock market. It's the bond market. Earlier, was it on Friday, I told you thusly I can't remember. Did I tell you thusly?
I informed you thusly.
I informed you thusly. I'm going to have to remember that. Anyway, Micron Technology told China's Unigroup Limited that its $23 billion acquisition offer is not realistic because the U.S. authorities would block the deal to national security concerns, according to people familiar with the matter. I said that Friday. Not only did I say that Friday, but I said that whoever was behind this in this company in China knew that going in. You can't be that stupid. And most likely they were doing a favor for somebody else that had a lot of options probably in Micron and wanted to see the thing bounce for one day. Tricky little devils. But that's the way every day happens in China and their market. I think they just figured they could do it over here. Energy problems. Banks are setting aside much more money to cover bad loans to energy companies. It looks like a lot of these guys over the books over the last few days, any loans that they have are starting to be, they're starting to put set-asides for them. We've got a stock price, or not a stock price, a price of crude that's somewhere around $50, $50.63 right now, is problematic. And I don't know what else you can say about it than that. That is, a lot of these people, just like the gold companies, all were set up for $80 to $100 crude. And, when you get a huge move in commodities, what do you do out here? It is problematic, but what else can you say? But look for some of these banks to, in the very near future, if they're already starting to put money away, look for the next quarter for them to say that they've got loans that are delinquent in the energy sector. What else do we have? Financial engineering. Qualcomm is considering a break off of its chip business to focus on its highly profitable patent and licensing business. Company's also laying off thousands of employees. And, of course, Qualcomm really didn't get much of a bounce, kind of picked a bad day to give up crack. $65.07, up $1.29, but it's just, they picked a bad day.
It's like I picked the wrong week to quit drinking.
And they picked the wrong day to do some financial engineering. Shake Shack is offering 4 million shares to investors to also get some of the early people out that are a little nervous on Shake Shack. It is or was down 5% in the after hours last night. Let me, what is it? SHAK. It's up this morning, up $3. And what else can you say about it? Anyway, we are moving along, and I can't say anything else about it.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And of course, people in the den talking about LifeLock. I'm not exactly sure what happened with it. I looked up on the snooze and didn't see anything other than it's been halted twice. Didn't see why they had halted it. Maybe somebody in the den can say, other than the fact that they halted it, reopened it, it's halted, and it was down 38 or 39% already. But that's what happens. This is a fast-moving market, and you're either in Google and it runs $100 up, or if you're in LifeLock, you're down 40% in the blink of an eye. Apparently, there was some kind of tweet that went out. I don't know what the underlying part of that tweet was. But it was very interesting to see the movement in that. Maybe someone will say something about it. Government investigation, someone says in the den. Hackers have already caused the company Ashley Madison $200 million. They've done that by basically scuttling an IPO that looked like they were going to try to push this thing out within a few weeks. I talked at length either today or Friday about, I guess it was yesterday, about how almost every one of these dating sites is a scam. What you ultimately find out is that there's a bunch of love-lorn men all emailing some computer on the other side who they think is a woman that wants to meet him. Probably only duplicated by the amount of people that are on To Catch a Predator who think that there's actually a 14-year-old girl waiting at some house to meet them, and if they just bring beer and pizza, everything will be hunky-dory, only to find the guy going, what's all these people and these cameras doing in here? Same kind of thing. Anyway, Ashley Madison, the cheating site, IPO on the rocks. And I guess we could play, I'm going to have to get this an update theme to this if any more news comes out, and have to play Love on the Rocks, because that's basically what it is. There is a lot of problems going on in the master limited partnerships. If you see MLP in any of the ETFs or the stocks that you are trading, watch out. I think we're starting to see a little bit of people getting very interested in the IRS's decision. Not only affects firms that will look for MLP status in the future, but firms that have already structured themselves as MLP previously. This is a huge issue for investors with more than 100 different stocks that rely on the status. Basically, they are going back and saying the 1987 U.S. law governing them was way too vague, according to the IRS. So they're making a brand new one that will not allow them to avoid all the taxes that they have up to this point. If you wanted to probably start shooting some fish in a barrel, this may take some time to play out, but I would watch for a lot of these companies to restate their earnings going forward, as you never know when they're going to do it, but it's going to take a dramatic amount of money out of these. A lot of these MLPs were oil drillers who have already gotten slammed. And I warned about any of these 6 months and 9 months ago that it certainly looked to me like a lot of these people were selling at the top and selling the MLP status to other folks, and a pig in the poke. And it looks like not only will the oil price kill them, but the IRS also. And it is a mad market. What else do we have? Let's take a quick look at Apple. AAPL. No matter what comes out, look for a bevy. I guess that'd be a appropriate word, wouldn't it? A bevy of Wall Street stooges to come out and say how Apple is only going to end up owning everything and everyone in the near future. They may have good earnings, they may not. No matter what happens, my guess is that these will be, there's going to be a one-note Johnny after the bell, and we'll see. But I think we're going to look at this. But, we had this thing kind of trying to bounce through this 133 level. Everybody's chasing one stock. Everybody's long this one stock. We had significantly heavier volume into last week's low at 119.22. That suggests that we will retrace it. We've got lighter volume yesterday compared to either one of the previous highs. Even if you're being judicious, you need a 70 million, you got 55 million. You could need 110 million and have half that with yesterday's high. Watch out. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we come back, I want to thank Terry and the Den for pushing the news on LifeLock. And that is basically they had a problem with the Federal Trade Commission. They already had a settlement from 2010 saying what they could and could not say about their product. If you've ever run across, especially vitamin supplement ads, there's a great deal of what you can and cannot say. And there used to be a guy on TV a lot. He's in jail now, Gary Trudeau. And he made a deal with them, and he did not keep it. And he's, whatever happened to they're making small ones out of big ones, beating rocks and stuff. Well, anyway, I don't think he's doing that. He's somewhere in the Club Fed world. But it is down, lock limit down, yeah. Trudeau, he was quite the character. But there are a lot of things that you can and cannot say because, of course, they've never been tested. And I suspect a lot about what the original claims in 2010 were about was they said that they could keep you from having your identity taken. And that is not true. All they can do is alert you. The cow's already out of the barn once, pretty much once you start getting the alerts, which is kind of interesting. But huge advertisers on daytime AM radio, podcasts, and a lot of other stuff. So my guess is a lot of those ads won't be running anymore. So you'll probably find more squatty potties and other things being advertised on those. Yeah. What else do we have? Oh, we wanted to get into some of these stocks that were moving. I want to talk about Microsoft. Not a really beautiful chart out here, but again, there's just so many things going on with Microsoft. Their official launch of Visual Studio happened yesterday. If you think that Apple makes a ton of money off of desktop publishing and artistic endeavors, you ought to look at the money that Microsoft makes out of selling suites. And some of these can be up to $2,500 per seat, i.e. per programmer. And they've launched their 2015 version of the Visual Studio yesterday. They never really talk about it, I think, for one reason, and that is so that they don't get beat up too much. But this is a huge money maker for them. So they've got a lot of stuff going on, even though they're going to be giving away the upgrades for free. I don't think it's the end-all, be-all for them, but it is nice to have it out. I've been testing it, beta testing it for 6 months. There are a lot of features that were in very, very expensive software packages that I loved going back to my SGI days in the early 90s when I was hanging out at Stanford. Fairly close to the SGI folks, but I went there for a summer sabbatical to learn some stuff, and I was going, wow, I would have loved to have all these tools that are available on these systems. But of course, even back then, I think the computer that we gotten to do some development on was 20 grand, and the software was 25 grand or something. And it was huge. Speaking of supercomputers too, saw that Cray, C-R-A-Y, I know we got a couple of people in the den that like to play that, got a big deal for building supercomputers for Australia. It didn't seem to change Cray's trajectory out here. It's more at the bottom end of the market, but I think it's probably more a function of the market itself. Anyway, wanted to look at a few of the companies out here that are at lows, and we talked about it the last few days, and that is that volume probably didn't shrink enough at these lows for some of these companies in the energy sector. You could almost make that we've got a hammer candle out here, and maybe this thing pops back in the trading range. But right now, I would say that you are already into Tuesday, maybe into Wednesday, and crude has not really decided to pop a lot. We've got gold still under 1,100 bucks, 1099.90 right now. Crude is what, $50.85. A lot of people calling for a bottom in crude, and I don't think it matters. I think you need probably, what, 15, 20 bucks to really change the profitability of anybody in that energy sector right now. And I don't think right now we blew through 53, which suggests that we are now in the lower trading range. So maybe does this get back up to 53? I think it does. But does that change the profitability of any of these companies significantly? And I think the answer is no. As always, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can post messages in the den if you would like. Other stocks of interest, SCCO, Southern Copper out here. This should have bounced yesterday. Really didn't. Had very light volume out here today. There is a gap that's been acting support for a long time in SCCO. That gap goes back to the 3rd of February. It popped up on 3.4 million shares. Came back with 1.8 million shares, 3.9 million shares on March 27th. Spiked into it on July 7th with 2.2 million shares. Yesterday, we got into it with light for 1 million shares, and it should have popped out here. I still don't like the energy on the way down on this one, so I'm going to say more U-type bottom if you're lucky than anything else. The IYE is another one of the energy sector moves out here. Seeing a lot of this kind of little hammer candle out here, but of course all these have broken the lows. And when you look at the IYE yesterday, 1.1 million shares compared to 1.3 million shares of the January 14th low, still not enough for me to say that this thing it didn't come in there with 500,000 shares, came in there with 1.1, even though it's lighter, and there's not probably as much downside in crude. I still think that we could have a bottom in it and not a V bottom in it. Let's check in with the markets real quick. Okay. 2119, so we're off the bottom a little bit, 2.2 billion shares. So volume is okay, but not huge at 2:41 Eastern time. And again, a lot of this is going to be on how earnings come out, at least for the next day or two, and then the market's probably going to head back in its general trajectory. Let's look at some other stocks that are interesting. IM Gold, kind of an interesting little run out this morning. This one needed 19 million shares. Yesterday it had 9 million shares. Or what did it have? Yeah, 6.6 million shares. It had 9 million today against 19 million of November 5th. All these gold stocks, you're going to have to look at their books very hard to make sure that these guys can make it a $1 stock. How long can they continue to survive without issuing more shares and possibly getting delisted on if they're on the wrong indexes? So keep a look on that. IGT, International Game Technology, nothing in that one. What else did I wanted to see out here? TripAdvisor's earnings coming up. This $89, $91, $92 area has been resistance in the past. You need 4.2 million shares against the March 3rd high at 91.47. You had a huge spike, couldn't break through it back on the 18th of June. Last few days we're back up here once again, 1 million, 1.3, 1.4. Very, very light volume over here on the right-hand side of the chart. And, of course, it's all about China and what happens in China. And kind of tough to say anything other than that. We looked at Garmin out here. This thing spiked through low, had kind of a retracement back in it. Looks to me like it's headed back to the $41 low. Again, I don't see anything changing in this stock anytime soon. Everybody can build their own GPSs, have them in their phones, have them in their iPads. Does it really matter that much? Wanted to check back in with Google out here and see how it's doing today. As generally, I guess that's Google L that everybody's trading. So let's take a quick look at that one. A little bit of a pullback yesterday. Again, a push out here. And this is what I normally talk about in the 3-day rule. That is that you don't want to touch one of these things that has a huge gap up or down, i.e. gold, for 3 days. And that's because whoever's on the wrong side of these things, they almost never let you out easily. If you're on a margin call, and I can imagine a lot of people were either long or short Google, but if you're long, they're figuring they're playing with house money. And if you're short, you're hoping for any kind of pullback where you can get out at a better price. Usually that does not come before your margin call comes. And my guess is, well, this is the 3rd day out here, that there'll be kind of at the very end of the day, probably a little push in this as people that were short the stock are forced by their brokers to buy out of this. So we want to look at that. Gold, Rheingold Gold. I saw this was starting to pop a little bit this morning. And again, it's hard for me to just see any of these gold stocks that everybody isn't going to say that the low's in gold. And my guess is there's going to be a bunch of people pile into this, and there's going to be yet another huge gap down. I don't think this is why it may have found temporary support. These things probably have a little bit more despair to go on out here. Let's see what else. I got 4 minutes. Finistar Corporation, I think they've got earnings coming up fairly soon. The $17 range has been support from January 16th and February 2nd, but you need about 1 million shares. Might do it. It's kind of playing around down below. And unfortunately, once you get below those stocks, especially the way the market's moving now, kind of easy to figure out how some of these things are blowing out local. Financial bear shares have significantly gone below the June 23rd low out here. Of course, the gap couple days ago when everything started moving up. But you haven't seen a great deal. You would want to look at 1059 as a close back above that as a long-term buy signal on the bears side of financial shares. Extreme Networks, another one of these things bouncing along the bottom. This is one of the best looking penny stocks out here. Again, no V bottom out here, probably a U bottom, and that is because of the fairly significant volume off the 310 high on June 12th. But I tell you what, it's hard to see stocks look any better than this at lows. This thing's gone a dime below without volume. And maybe we're going to see, if we're going to see a move higher, I'm not going to be trying to ride Google higher or some of those other big stocks. There's a lot of these stocks out here that are just hugely washed out in the penny stock area. This is one of them. EROC, of course, natural gas getting no love. It just needs a hug. But it is down finally and testing the December 23rd low at $1.78 that had 3 million shares with 1.8 million shares. A little bounce out here today. But again, a lot of energy on the way to these downside. This wasn't just a low volume sell-off. It was a purge. And those don't normally have U bottoms either. But this is where you start putting these on your radar and start watching these. If natural gas was really starting to move, that would be something. Now, this is one of those MLPs, and I don't know exactly how that works out, so I'm going to have to investigate it. But as we said earlier, any MLP out here is something you've got to be watching very closely in this space. You don't want to be playing around with those. If the long arm of the IRS decides that maybe you're not a political party they like, or maybe you're in the crude business and they don't like that either, you don't want to get on the wrong side of the IRS. Let's see if there's anything else. CLR out here, Continental Resources. This looks like it wants to get back in and test this $30.06 low. You know, we're in the high 35s now. Energy didn't really come back off. You did break the previous low of $38.33 from March 27th on significant volume. Opens up this $32.51 and $30.06. And this is where I'm starting to think that maybe we would see some kind of low in crude, and that's one of the reasons. There are enough of these stocks out here that make me think that we can see that. CLF, Cliffs Natural, another one of these stocks that broke through the previous low, didn't have the kind of volume that would say it was a jump of the creek, but they just are continuing lower, and there doesn't seem to be any stopping these things. Cliffs Natural, CLF, I know you got a little bit out here today, but you know, this thing is well under that low of March 18th, and you just that's the problem when you start breaking lows on lighter volume and you don't get any response out there like it should act. You can see a lot more pain to come, and this is normally the way stocks in their life, not the way they're going to have a monster move higher. So keep a look at those commodity stocks, see if they can break the back of it. We'll be looking at a few more stocks when we come back. Email me at path@tfnn.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And got a request to look at Yahoo real quick. Of course, Bristol Myers Squibb. You've got a triple top in it now and confirmed lower price. So you've got a sell signal in BMY out here. That is 10 million shares on the first high at 69.20. Second high came in, pierced it at 69.86 with 7.3 million shares. Of course, yesterday we went through it at 5.2 million shares and right back into the trading range, dear friends. But as I said, we were going to look at got Yahoo coming out. Of course, I don't think you can make a lot about Yahoo other than it's probably going to continue to track Alibaba until they get rid of it. And then the IRS, another issue out here. IRS is changing the rules and regulations on it. But right now, this thing's probably trading at about a $3 premium for all of Yahoo. I'd like to see when they split this off what the stock price of Yahoo is. My guess is so that they don't have complete embarrassment. Whatever the split is going to change the amount of shares to get the stock price back up into the $40 range, and avoid that embarrassment, because it would be kind of something to see this stock trading at $3 post split, totally Alibaba. But what else can you say? Amgen, nothing out there. Take a quick look. AOL, of course, that's being sold or bought. See if there's anything else out here that really caught my eye. BMY, CDE. Take a quick look at CDE. I haven't looked at this one. There's a $3.37 flat here at November 5th. Back into some gaps that are acting as interim support for CDE. But you still have that low that has never been tested at $3.37. I suspect that would be the one place that you might be able to buy that and at least have some kind of technical edge on the market. We talked about CLF, CLE, CFX. Yeah, let's take a quick look at Apple yet again today. Well, I mean, if you just looked at it today, you've got a nice sell signal on Apple. It's back into the trading range. And again, this is going to be everything tomorrow. Still 14% of the NASDAQ 100. I don't think that anything's going to change on that. See if there was anything else out here that I wanted to see how it came out. Not a whole lot. We were talking about HAR last week. I wanted to see how this one worked. One of the stocks that should have bounced with volume today. We talked about this thing coming back into the gap on Friday. That gap is everything that you would want to buy in a bull market. But one thing you should be seeing today is a ton of volume going against this January 29th gap up with 4.8 million shares in here with right volume. But again, so many stocks at lows where they're at support just continue to drip down lower and lower. Very, very narrow leadership, of course. A handful of huge tech stocks that are getting all the love, everything else getting next to no love. And we know that you got to spread the love around if you want the indexes to stay a little higher. Probably a little bit too much love being spread on too many or too few stocks right now to see a lot happening. Anyway, we're back at the lows of the day. Not much else to say about it. It'll all be about earnings the next few days. In the meantime, so when you can, not when you have to. We got 2 hours of Tom O'Brien and then Andy Heck after him. See you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.